Hi, I'm Craig Kirsner, President of Stewart Estate Planning Wealth Advisors, and I wanted to talk to you today. It's December 30th, 2019. I wanted to talk to you today about the repo market and what's going on in the repo market and why it's important to you to know what's happening. So first of all, the repo market is when banks and mutual funds lend money to each other. They actually lend money to each other all night long. They repurchase. Repo is repurchase. So they're literally transferring dollars back and forth all night long. And that gives these giant companies a chance to make money on your money and their money, their clients' money, overnight. And it's not a lot of money. During the year, they typically make about 2% interest on this money. But on tremendous amounts of money over time, over the year, it adds up to a lot of money because we're talking about some big sums at 2%, a substantial amount of potential income. So what happened is, normally it's 2%, but what happened back in September of 2019 is that the repo markets in the middle of the night went from 2% to 10%, okay? They jumped from 2% interest rates to 10% interest rates. Of course, that's a major potential problem. So the Fed came to the rescue essentially, and that night they started pumping money into that market. So far, they've pumped $400 billion into the repo market since September just to calm it down and give it more liquidity and keep those interest rates back at 2%. Now, so a couple of things you should know about that. So that's a concern that overnight lending rate jumped from 2% to 10%. And the concern is also what the Fed did about that. So let me show you what happened. Let's look at the history of the repo market and what the Fed has had to do to intervene in this market. You can see in 2007 and 2008, they had to do some serious intervention. You can see this big jump here, serious intervention in this market of pumping billions and billions, hundreds of billions of dollars into that market in the crisis of 2007, 2008, 2009, into this market to keep it liquid. Then you can see on this chart at the bottom, nothing really happened since 2009. And then all of a sudden, if you could see down here that 2019, let me just zoom in a bit, 2019, all of a sudden, they had to go all the way up here of intervening in this market, okay? So nothing, and this is in 2019 with the markets at all-time highs, they had to pump all this money into this market to keep that market calm. This is even higher than what was happening back in 2008 and 9, okay? In the financial crisis. So that's number one. Huge amounts of money to keep the market calm, so to speak. The other thing you should know is this is the Fed balance sheet, for the last 5 years. And so this is what the Fed, remember, to bail us out in 2008 and 9, they did, QE1 and 2 and 3 and twist, all of these stimulus acts that literally the Fed was taking in assets and pumping trillions of dollars into the system so that we'd have the liquidity and keeping interest rates low to jumpstart our economy again back in 2008 and 9. So this is what's interesting. In 2017, they said, you know what? We got to start getting rid of some of these assets. We've got, this is $4.5 trillion of assets. We got to start lowering that. So they told people they're going to start lowering their assets, lowering their balance sheet. They started raising interest rates in 2018. And lo and behold, what happened as they start getting rid of these assets and raising interest rates? Boom. End of 2018, October, November, December, we had almost a 20% move down in the S&P 500, and the Fed stepped back and said, whoa, we're going to lower rates next year. We're going to loosen things up, and that helped spur the economy. In 2019, we've had an incredible year in the stock market, percentage-wise, one of the best years in history, right? Now, what's interesting is, you can see the Fed's balance sheet was going down. They were trying to get rid of some of these assets, and they were successfully doing that, until end of last year. They had some challenges. But you can see here in September of this year, this is September of 2019, all of a sudden, this giant move up. This is the over 400 billion that they pumped into the repo markets. Now, the Fed is not calling this QE. They're not saying this is a quantitative easing program. But the fact is they put 400 billion into these markets, and the stock market since September has been on a tear to all-time new highs. And these kinds of liquidity events, adding 400 billion, often finds its way into the market. And this is helping propel the stock market higher, this kind of easing, right? So that's the point, is that that's what the repo market is. That's what's happening right now in the market. And as you can see here, this is the S&P 500 for the last 20 years. Obviously, the past doesn't predict the future, but the point is, since 2008 and 9, the last crash, we've had 10 long years up, 11th year of this bull market. And, many of my clients that are retired and millionaires, they're looking to really preserve and protect their wealth. So they're starting to get concerned about these things and some other things that are happening in the economy. And we just want to make sure you have the right plan for you. So if you want to attend one of our upcoming dinner workshops at Ruth's Chris or Abe and Louie Steakhouse, we'd be happy to have you learn more from myself and the estate planning attorney to talk about dynasty estate planning as well. Hope this was useful information for you about the repo market. Looking forward to seeing you soon. Craig Kirsner, Stewart Estate Planning. Thanks for listening. I appreciate your time. Have a great 2020. Happy New Year. Best of wishes to you and the family.